In this video, I'm going to break down how I made $53,000 in this. So, oh my God, when I was getting ready for a little webinar, it took me so long to just get everything ready. Look at this. That's my preparation. I'm like freaking sitting here thinking, how can I make it so everybody can understand? How can we make it super easy to understand? Hey, this is going to be fun. All right, let's get it. Now, first things first, I want to break down short squeezes, gamma squeezes, dynamite levels. When does this stock becomes ready for squeeze? And then comes gamma squeeze. What's the whole concept? And there was some concepts. Why did this work? Because of the elections. So there was big chances that this might have worked, and that's why I was so confident. And even on the if you guys remember when I was on the Zoom call and I was trading and you guys could see my screen, I was like, just don't fucking sell. Hold your Tesla because this is going to be a big move. And I want to break down what made me so confident about the trade where I was able to hold my big position. Actually, matter of fact, I lost about $15,000 on SPX. Otherwise, this would have been like 70, nearly 70 grand. I lost like 15, 16,000 on SPX trade. I'll break that down as well. But let's do this, yo. And first things first, everybody here knows I really want to quickly, just for 1 second, break down the time frames because this is important as I start breaking down my trades. This is going to be important because there's huge, like this was a huge help. I only watch 2 minute chart, 5 minute chart, and 10 minute chart. So I draw my levels on a 1 hour chart, as most of you know already, and only 1 hour chart, and then 2 minute charts from 9:30 Eastern time to 10 a.m. Eastern time, 5 minute chart from 10 a.m. Eastern time to 11 a.m. Eastern time, and then 10 minute chart from 11 a.m. to 3 p.m. I do not trade last 1 hour. I've been saying this almost in every single all of my YouTube videos as well. I don't trade my last 1 hour. These are the time frames, and for people who think the stuff has become repetitive. I already know this stuff and all this. But for you, if you're just watching my videos, if you're attending this webinar and you think this stuff is it's repeating, the content is repeating, that's called day trading. Welcome. You are now becoming day trader. It doesn't get boring for me breaking these concepts down. But somehow some people do dramas, eh? Fucking this stuff is getting repetitive. But today it's gonna be fun. All right. Time frames done. Second point is called dynamite levels. All right, dynamite levels are every $50 levels on stocks. Every $50. So that means 50, 100, 150, 200, 250, 300. On Tesla, we had $300 mark. All right. And then also the other dynamite levels are 111.11, 222.22, 333.33. All these same digit numbers, they dynamite levels as well. For example, it could be like Tesla broke this 300, and the next dynamite level is 350 plus 333.33 as well. Does it make sense? So these are critical levels, these are huge levels. Why? For this, there's no why because this is just whole numbers. These why I've back tested so many, oh my God, hundreds of trades. All these levels from 111 to 111.11. So that's a, what is this? 11 cent move. This will be a dynamite zone. From 222 to this will be a 22 cent zone. All right. This will be a 33 cent zone. So for imagine trading this, now you have from 999 to this plus 1,000 is a dynamite as well. You see what I'm saying? So that's why big, huge whole numbers are super hard to break for the stocks. And dynamite levels just means as soon if we break this, the stocks can explode like dynamite. If we reject, it can reject massive again like a dynamite. Stocks go it gets they get attracted towards this one topic like a magnet. So if the price is trading around 296, 300 becomes a magnet. It'll pull it towards it. And then there's only two options with almost every single level. One we break, second we reject. But from dynamite levels, either we break super heavy, it goes big, it's a big move, or when it rejects, it makes a huge move as well. You had mentioned that you will exit the run, you will hold the runners the whole day as bullish sentiment candle could be bullish too. Do you exit the trade last hour? Yes. If I, for me, the whole day means 3 p.m. For me, the whole day does not mean 4 p.m. 3 p.m. I want to be out. Doesn't matter what it is. And that's it, guys. Please don't confuse this whole topic. No, if you're watching 500 mark, 510 is not dynamite. Just every $50 moves or every all these repetitive numbers. These are called dynamite levels because this will be important as we go along. So dynamite levels are clear. Just say yes, guys, in the chat. Just say yes if this is clear. All right. So far, everything's sweet. And then comes our huge point, which is, and this is gonna take some time. I'm gonna go with my speed that I usually go. Short squeeze. So what's a short squeeze? The first concept behind short squeeze is I'll explain what's shorting. Shorting basically, in other words, would mean when we go long on a stock, that means if anybody here holding Bitcoin, so that means you're holding Bitcoin. That means if the price of a Bitcoin went from 50K to 70K, you made $20,000 in profit if you have one Bitcoin. In shorting, it's just exactly opposite. That means you will sell first. Here, what did you do? You buy first, and then you sell when you have to take profits. That's how normal trading works. For shorting, don't confuse it too much. It's just opposite. All right. When you go long, you're betting that the stocks can go up. When you go short, you're betting that the stock can go down. And yes, you can make money both ways. All right. For shorting, what it would mean is you check this Bitcoin at 70K. You're like, oh, Bitcoin is at 70K. There might be some, and I've read some bad news coming out, whatever on the company. And you're like, it can't go down. I think it can go down to 50K. So what do? You press the sell button first. There's nothing fancy about it. All right. How you press the buy button to buy the shares, you press the sell button first, and then when it goes down to 50K, you press the buy button and you make the difference as profit. This is the concept behind shorting, and there's nothing fancy about it. All right. Now, there's one thing though, one key thing, which is, I'll break this down actually moving forward, no problem. All right. Now, why did people short at Tesla? All right, so everybody here knows that Elon Musk was big time behind Donald Trump's presidency. He was like fully going all into this, so he was taking on a big risk. And because of this, such a big risk, there were a lot of people who were thinking that Donald Trump will not become the president, and that means because Elon Musk has been endorsing Donald Trump so much, if Musk is wrong and if Donald Trump didn't win, the stock can go down. And that was what the basic concept why so many people were shorting Tesla this past week was, because of Elon Musk was getting so deep into politics. Like you never hear Tim Cook talk about Tim Cook, the guy who's behind Apple right now. He'll never come out and be like, hey, the stage, trying to promote Donald Trump or whatever. He doesn't do that. But Elon Musk, because of being Elon Musk, he likes to do that shit. All right. So that means whatever the result of that is going to affect his company. All right. So because of the elections, a lot of people were betting that just in case if Donald Trump didn't win, the stock's going to go down big time. Right. So now what they were doing, they were shorting the stock. That means they just pressed the sell button first, thinking that the prices will go down, let's say from 250 down to 200. That's what they were thinking, or whatever it was, right? And that's why so many people were shorting Tesla. And this will be important as we move forward in the video. Just understand this concept. All right. And now the question is, how does shorting something, or how does this whole concept becomes a squeeze? And what's a squeeze? So when you squeeze an orange, what comes out? Orange juice, right? You squeeze a lemon juice. When you squeeze a stock, what comes out? Big losses for a lot of people. Okay, so what does that mean? What it simply means is, and when I say shorting, this is the concept. No, this is not, and I'm not including anything about options yet. Anything about options will be gamma squeeze, which is a part of the video moving forward. But right now, I'm just explaining the whole concept on the stocks, what a lot of people do. Not everybody in the world does options. Most of the people actually just do stocks. All right. This is just the concept behind stocks. And then we'll switch to options as well moving forward. All right. Now, when does this become a squeeze? When we broke the $300 mark on Tesla. Plus, Donald Trump won. Okay. Now means Trump won. He's the president. That means Elon Musk is right. Okay. That means stocks. It can move, make a big move. Second, this is the whole concept behind this. Why Trump won. Second, people just realized that whatever the thing Elon Musk is behind, it just becomes gold. How? This dude invented PayPal. It became gold. All right. It changed the, like, you could send online. It changed the whole concept behind internet banking. And then he got behind electric vehicles, became gold. SpaceX, that thing fucking tried to catch a rocket, fucking try to catch a rocket falling from the sky. Like, what the fuck? And then Twitter, not that I use Twitter because fuck, this is crap to me personally. For the free speech or whatever this guy is touching is becoming gold. And now people like Donald, he touched Donald Trump, and Donald Trump has become fucking gold. He's a president. Now that means the goodwill kind of comes into place. That means, oh, this dude's right again. And then we have a dynamite level. Okay, dynamite level 300. Why is this dynamite level makes such a huge difference? Why? Because let's say if somebody is going short at 291, all right, he's shorting, let's say, 1,000 shares or 10,000 shares for this case. He's shorting 10,000 shares at 291. Where if you are this person who has boatloads of money to actually short 291 times 10,000, such a huge chunk of money, where would you put your stop loss if you are this person? 300 is sitting right there. You're like, in your bike, I don't think it can break. If 300 breaks, that's my stop loss. Does it make sense? Because it's such a huge number, you just straight away go, I don't think 300 can break, but if it does break, that's my stop loss is just above 300. Sweet. Now the price moved towards the upside and it broke 300. Now the moment it broke 300, this dude, let's call him Jim, right? Jim is sitting there. Jim is like, oh, fuck, I'm fucked. All right. Hey, excuse my pardon my French, but it's really important to really important to just pay attention to these words. Jim sitting there, Jim's like, shit, I fucked up. All right. Now, in order for Jim to go short, what did he do first? He pressed the sell button first. All right. Now he has to close his position because his stop loss is getting triggered. Now, how can he close his position? That means he have to now go on his broker and press the buy button. Yeah. Hey, up and here. Does it make sense to everybody? Say yes in the chat or no in the chat if this makes sense. All right. So wait. Now he has to go to his broker and press the buy button. And when he presses the buy button, what happens? The order, whatever this shares is, 10,000 shares, the order goes into the exchange, goes into the market, and becomes a buy order. Why? Because he's pressing the buy button. Even though he's not buying the shares, but the order is coming into the market as buy order. Yeah. Even though he's going from minus 10,000 shares to just zero. All right. But the order is coming into the market as a buy order. And now he gets out at, let's say, 300.2. And when let's say if you are a person and you try to buy all the lighters in your city, there's only 3,000 lighters available, and you try to buy 1,000 of them, and then you buy another 1,000, then you buy another 500, there's only few lighters left. That means you are soaking up all the demand. What happens? The prices of the remainder of the lighters go up. Yeah. That's how, because of the limited supply. Now there's only limited supply, the prices go up. Just basic economics, right? So now what's happening is this person is buying 10,000 shares. That means the prices of and he comes in the market and he presses the buy button. Now the volume goes up and prices go from 300 to 300.2. And then we have another dude whose name is, let's say, Mr. Amir. All right. He's sitting there and he's like, shit, I'm fucked too. Let me just get out as well. And he has 10,000 shares as well. So he comes in and he tries to buy. So now the price goes up to here. But think about it. All these orders are coming into the market as buy orders. That means there's limited supply of lighters. Everyone wants to buy. What's happening to the prices of the LiDAR? It's skyrocketing. It's making a huge move towards the upside. Does this make sense, yo? Now imagine if somebody does not sell. He's like, nah, I don't want to sell. Bro, that's like holding on to a loser. That his loss is gonna become massive and massive and massive and massive. This is why shorting is super risky, because think about it. If you're shorting a stock that is, if you let think about it, if this stock is worth $4, and if you're going two scenarios, one is going long. That means if you're going long, your stop loss, stop loss can be $4. While stocks can't go -1, can it? No, if you're going long on a stock, max loss per share is $4. But when you're shorting a stock, your max reward is $4 because it can max go to zero. But what's the stop loss? If you do not have an actual stop loss, bro, the prices can go 99999, fucking 100 million. Who cares? But the prices do not stop towards the upside. It's unlimited. All right. That's why you definitely need a stop loss always. So that's why these people have stop losses. And the moment 300 breaks, all these orders are coming into the market. Somebody buys at 300.2, somebody buys at 300.3. And then somebody else sees, oh my God, price is going up like crazy. And then Mr. Ryan is like, oh my God, I didn't think it will break 301. And then 301 breaks, and he tries to sell his 100,000, buy his 100,000 shares back. And now the prices are just skyrocketing because everybody wants to get out, right? That concept is called short squeezes. So wait, make sense? Okay, these concepts are not very common. They happen every now and then. They're not very common because you always want to pay attention to there has to have some news. That means if there's some news, that means if it can break some dynamite level, it can make a huge move. You always want to pay attention to if people are short, like try to understand psychology. If other people are short, short means if they're going short, that means they're betting the stock prices can go down. These people are in pain right now, right? And in stock market, this is how the game works. More the pain, more there is to gain, right? I want them to fucking suffer because I'm like, I don't, you should have fucking have a stop loss. You should have, and somebody who's like, oh man, maybe 301, maybe 302, maybe 303, I'll sell 303. And then 303 breaks, price is at 310. He's like, oh fuck, I'm still holding this. I'm down 50,000. Man, I want him to fucking sell at 315 so the prices can go to 316. Because I was sitting here at this time, I was sitting here long with my options. All right. This is the concept behind short squeezes. And then comes gamma squeezes, right, which is absolutely insane. It works, it works kind of same like short squeeze, but this one works with options. All right. Short squeezes, everything clear? Yo, make sense? Say yes. That's how short squeezes work. And then comes we have the gamma squeezes. But sweet. Gamma squeezes is freaking, oh my God, it's so crazy. You guys are gonna love it. All right, I have some my note. Hey, even on my note, look at this. These are my notes. Even on my notes, I've written "fuck." Like you need these, bro. This is what I think. Like I can't express myself if I don't have these words. All right, let's break down the gamma squeeze. This is advanced stuff. All right, so this might take you some time to understand this. I'll try to be as slow as possible. All right, the first point for gamma squeeze is we want to break down option selling. Like you and we are option traders. Yeah, we only go long. Like we might buy call or we might buy a put. You see what I'm saying? We might buy a call or we might buy a put. But when you buy a call, that means you can't buy a ladder if nobody's selling it to you, right? You can't buy a ladder if nobody's selling it to you. That means if you're buying a call, somebody on the other side has to be selling you a call as well. Okay. Same concept here. Like we do not set side of it because you just want to buy three calls, prices go up, and then sell out three calls. That's the whole point. But on the other side, somebody's sitting there who's selling the options as well. Sweet. And this is the selling concept. I don't want to get into too much detail because I promise you, option selling do not finish if we start talking about it. This is it. All right, option selling. Somebody's selling those contracts. But now, why are they even selling the contracts? They're selling because they want to collect the premium. What's called collecting premium? So, when you pay the premiums are $4 per contract, that premium is going to the person who's selling you, even though you are just flipping the contracts, whatever, but that premium is going to the person who sold you the contract. Right. So if he's selling 100 contracts, that means per contract it's $4. That means he's making $400 times 100. He's putting that money in his pocket. All right. Now this works a little bit crazy. Don't get confused. Don't think like, oh, maybe I should just sell options, but it's super risky. I'll talk about it in a minute. Um, but that's the whole concept. Right? He's just doing it because he want to sell the premiums. All right. Now, when do the premiums move? That's a question. How do premiums move? Premiums move with when the stock prices move. Yeah. Premiums move with the stock prices. How else the premium moves? Let's say if the stock price is stationary, how can the premiums move? One is Greeks because they always dying. Let's forget the Greeks are everything is stationary as well. Stock price is stationary, Greeks are stationary. Implied volatility. What's implied volatility? Implied volatility just means what is more volatile. Volatile means when the result of whatever, let's say if there's a news coming out like earnings, around the earnings, stock prices can make a huge move towards the upside or downside. So the IV usually goes up. IV, think of IV as a little lubricant that the option seller uses so it doesn't hurt him that much. All right. So IV is just a way of us being like, thank you so much. And this is I'm using the lube. All right. And he just gets a little bit of special treatment around because he's selling, bro, he's taking a big risk. Because imagine he's selling um 300 calls and around the earnings and the prices go up and go at 350. Now he's fucked. How? Think of it like a think of like anybody uses the McDonald's app. Like I use them whenever I go for to get a coffee, and it usually has like this little code. Give me 4-digit code or whatever. It'll give me 4-digit code, and that means I can, doesn't price of a coffee inside the store. I'll only pay $2 for the coffee. Does it make sense? Like it doesn't matter the price can be $20. I'm only paying $2 because I'm gonna tell him the code and I'm only gonna pay $2. All right. And that's basically McDonald's selling me the premiums, selling me the options. Why? Because doesn't matter the price of it, they're obliged to sell me the coffee at $2. Even if they're losing money, doesn't matter. Right? Think of it like coupons. That's it. All the coupons usually have the expiry date. Yeah, like option contracts date. That means you have to use it by tonight or you have to use it by tomorrow for the coffee. Otherwise, this is no longer valid. All right. Same goes for the option contracts as well. There's expiry date. So now this person is taking a huge risk around the earnings. That means the contracts will move up a little bit. Just the IV would go up. As the IV goes up, the premiums go up. Instead of $4, it will be like it become $8 or whatever it is. So he just makes a little bit more money. But just in case if the trade goes against him, if the price of the coffee becomes 2,000, now they have to sell me at $2. You see what I'm saying? Now the loss is so big, the company can go broke just fucking giving 100 coffees like that. All right. So the loss is so big. So hence, the IV just acts as like a little bit like insurance. Like we'll help you a little bit. Here you go. So you don't take a big risk. And IV goes up around news. IV goes up when there's something that's coming out that can influence the price. That's when the IV goes up. Just think about it logically, yeah. IV only goes up when there's some news or something coming out which can influence the price big time. It can go up or down big time. But now, what was the factor on Tesla that would have impacted IV big time, which was elections. Elon Musk was balls deep into this whole thing. Yeah, elections. Everybody was watching it. Like, oh my god, if the results are bad, the stock's gonna dump. If the results are good, the stock's gonna go up. All right, the IV. And now, hey, this all making sense so far? Why the IV was up, and I'll break down the whole concept moving forward. Now, there were some people out there who decided to sell options. They're like, price is sitting at 250. No way in the world, because the IV is high. He's like, this, let's say Jim is sitting there. Jim's like sitting at home. He's like, price is at 250. Elections are tomorrow. 300, 300, the premiums for 300 is, let's say, $1,000 each. He's like, there's no way in the world stock's going to make a $50 move. I don't think you're going to make a $50 move. You know what? Let me just go out there and sell 10 contracts so I can just make 10,000. If the stock doesn't go up there, I'll make 10,000. Because think about it. It's a 0 days to expiration. If the stock drops, what happens? Far out of the money contracts, they go zero. Most of the contracts go to zero, right? So he's like, and he gets to keep all the premium. He's like, I think this is a quick, easy money. Sweet. He's not expecting the stock to make a huge move. So now what happens is the earnings, the news comes out, he becomes a president, and now the stock started moving up. So he's sitting there, he's like, yeah, the price is at 280. I don't think it can go up to 300. Yeah, price is at 285. I don't think it can go to 300. If it doesn't go to 300, he's going to make money. He's going to make same amount of money. Even if it goes to 299 and expires at 299, he's still making 10,000. All right. So because he's option seller. So now he's sitting there, he's like, yeah, I think I'm pretty chill. All right. But what happens is we break 300. We break 300 and he sold 300 and he's like, fuck. Now what happens here? He has to think about it as a coffee cup. He has to, doesn't matter what the price goes to 350. He has to sell, or he has to, sell those shares, the coffee cup at $300. Doesn't matter the price goes to 600. He has to give the coffee to this. Let's say if you go to the restaurant and you're like, hey, I got a coupon here. I want this coffee, and this is a coupon and it's $300. Doesn't matter if the price is at 30,000, bro. He has to give you a 300. All right. Does it make sense so far? Yeah. So now what happens is if it breaks this 300 towards the upside, Jim is like, oh my god, man, my loss can be big. If this keeps going up, my loss is gonna be big. So Jim looks at the stock and he's like, all right, it's about to break 300. You know what? Let me just buy the shares just in case. Think about it. Think about the price is sitting at 299. All right, 299. And it looks like you're gonna break 300. So Jim goes, okay, I shorted 10. All right, 10 contracts means 10,000 shares. Why? $100, 100 share per contract. Yeah, yeah, makes sense. It's always 100 shares per contract. Now he has 10 contracts which he sold. That means that that 1,000. Sorry, my bad, 1,000. All right. Now think about it, yo. What's happening here? He goes out and he's like, you know what? Let me just buy the shares now. So just in case, that's basically him going, let me just buy the coffee cups at 299. Even if the price goes 350, I still make some money because somebody's gonna still pay me 300. That makes sense? Like he will buy them at 299 so he can later sell at 300. Doesn't matter where the price is. That means he's gonna pay this much money for these shares, and then somebody later, if the price closes at 350, then somebody later is gonna come. Fuck. Somebody later is going to come and pay him 300 times 1,000 shares that he has, or 30,000. So basically, he still makes money, or another zero. Make sense? But now, what happens to other people? Think about it. There's somebody sitting, like let's say Mr. Amir sitting there. Amir is like, and he sold 3 5 contracts, and the price is approaching towards 3 or 4, and he's like, shit, I need to buy some as well now. All right. So all the people who have sold the contracts, they are trying to buy the shares before the price even. They're just trying to buy the shares so they can still make some money. And then we have 310 contracts, 315 contracts. Everybody's buying the shares. Why? And think about it, guys. All these orders are coming into the market as buy orders. What's happening when you start buying too much? And at the same time, we have short squeezes going on as well. where people are like, oh my God, prices are going up like crazy. And they are out of their trades. And then comes these people who have sold the options and they're like, man, I think I'm fucked. I think I'm fucked. I need to buy this now. So think about it. You buying this at 304,000 and somebody's gonna pay 300,000, you only lose $4,000. Yeah, you only lose 4,000. If you bought it towards the end of the day and the price is at 350, now you lose 50,000. That makes sense? So he's just like, man, I don't want to take a risk where the price can go to 350. I just don't want to take a risk. All right, I thought this might work, but clearly it didn't work. So I'm just getting out at 3 or 4. That's how he can. That's how the gamma squeezes work. All right, in the back end. All right, that makes sense. And then this becomes a squeeze because different. We have different contracts. We have 300 contracts. We have 305 contracts. We have 307.5 contracts, 310 contracts, then 315 contracts, 320 contracts. Price is going up because the short squeeze is happening, because of gamma squeeze is happening. Price is going up. 300 people who sold 300, they're coming into the market and buying, and then 305 coming into the market and buying, then 307.5 coming into and buying, then 310 coming into a buying, 315 coming. Bro, think about it. It's going nuts. You see what I'm saying? And the stocks make a huge move towards the upside. Now, how do you spot that it's a gamma squeeze? All right, this is super simple, yo. Um, it's just how do you know that it's a short squeeze? Whenever there's a short squeeze happening, you bet that gamma squeeze is gonna happen the moment the short squeeze happens. But it only gamma squeezes only happen on a Friday or on the day of the contract expiration. Why? Because there's no time left. There's no time left out there, right? If this is happening on Monday, you might be like, yeah, it might come down. So there's no urgency to get out of the trade straight away. But when it's happening Friday, bro, the if the price goes to 350 and I've sold 300 options, like I'm gonna take this $5,000 hit or 50, maybe five, yeah, $5,000 hit on every car sold. And I promise you, big money out there are selling thousands and thousands of shares, thousands and thousands of contracts. All right, because they're collecting the premiums. Sweet. Guys, please, hey, please stick with the concept that I'm explaining. You guys are jumping ahead too much. All right, I'll break it down. How do we know it? I'll break it down. Don't worry. Okay. Now we the time frames that I use. We covered dynamite levels. We covered short squeezes and we covered gamma squeezes. And this is the concepts are clear. Let me know, yo. Up to this point, the concept's clear. What is short squeeze? What is gamma squeeze? How does they both work? All right, sweet. Okay. Okay. Now let's talk about how do we know? How did I know that this is becoming a gamma squeeze? All right. I just want you to pay attention. Let's go on a 5-minute chart really quick. Less candles. I just want you to pay attention to the volume. This is Thursday and this is Friday. All right. Pay attention to the volume. Thursday, we made a huge move up as well. Look at the volume, nothing compared to this. Such a huge volume. Do you see the volume right here? You see the difference? And when did we break 300? Right here. Were we able to break 300? No. The moment 300 breaks, it made a huge move. Check the volume out. We haven't had this type of volume in long, long time. Check the volume. The volume's nuts. You see what I'm saying, yo? And now, the moment huge dynamite level breaks, short squeeze started happening because people have stop losses sitting on the top. And hence, what happened? We made a huge move without even, bro, it made a $5 move in just like a couple minutes. Right. Now, you know, up until this, you know, it's just the moment the short squeeze becomes the gamma squeeze is when we make a huge move after a short squeeze. All right. Think about the as a concept of people who are selling those options. They're sitting there, they're like, man, I think this is not just going up and doing a fake out. Look at the volume. This is not going to be just a fake out because how many times it has been the price goes up and then it comes back down. All right. It goes up for 10 minutes and then it comes back down straight away. Sweet, whatever. But when we are able to hold, these people are just sitting there who sold 300 calls. These people are just sitting there. If the price is able to hold nicely above a huge critical level on a Friday, like price held nicely, it's not coming down, it's started going up again. That's the time when all these option contracts psychologically they're like, man, I need to jump out. Now, is there any indicator they can tell us? No, there's nothing. This is just trying to understand the concept, trying to understand the logic behind when is these people they'll start feeling the pain. If I hold, let's say, if I hold a pen towards my hand, it doesn't hurt. The moment I start fucking really pressing on my fucking hand, bro, it hurts. All right. When the pain goes to a point where they have to just walk away from their trade and have to just close their option contract position, that's when this goes nuts. So now, when does that happen? First, for the gamma squeeze, it has to be the weekend, has to be the last day or 0 days to expiration. Second, it has to be breaking a huge dynamite level and then holding the dynamite level. Does it make sense? And when there's a short squeeze plus dynamite, it makes a huge move. Right? Go go do some back testing if you really wanna pay attention to how to actually spot this. Go do some back testing. When we break something like, let's say, dynamite level 50 or 200, or when we break a huge level like this day right here, we made a huge. This is already up. This could be a short squeeze day, because we broke 250, held, and stock made a huge move. Just go do some back testing, yo. Do some back testing. See on you. This is why on Fridays usually when the trend starts happening, usually it's it becomes such a trendy day on a Friday because of the gamma squeezes. That makes sense, yo. When a stock start moving on a Friday, it start making a huge move. Up until this stage, it's making sense. All right. Now let me break down my trades, and now this whole thing will, as soon as you start seeing into my trades, it'll start making sense. All right. First things first, I'll just break down my Tesla trade. I think that was the most important trade. I think I made nearly 65,000 on this one trade. Let me break it down. And for people who, because I'm gonna upload this to YouTube, for people who are like, yeah, whatever, bro. This was actually, check this out. What happened? Tesla calls at 12:40, which is like 18 minutes after the open. This is my time. Then Tesla looks good above this. I kept adding, and this was Richie Rich. I'm like, fuck. Okay. This was, I held the trade pretty much whole day. I think I sold after this huge move. Yeah, I actually sold around 325, somewhere around here. All right. Anyway, let's break this down, yo. All right. Tesla broke above 300. I was watching this. I'm like, Tesla broke above 300. And the moment it broke above 300, and hey, this is before 10 o'clock. I'm on a 2 minute chart. Check out the volume. Does that volume tell you that a lot of pain is happening to people? They're jumping out. A lot of stop losses are getting triggered. Look at the fucking volume. It basically, even the volume is showing them the middle finger. Like, fuck you. Because that's the level. Such a huge volume. You see what I'm saying? All right. Like, legit, the volume is giving him middle finger. All right. It made a huge move. And when I was watching this, now that doesn't mean if any big move is happening, I know for a fact if it breaks 300, if there's short squeeze, this is not going to be a small move. That means I don't have to feel FOMO. I don't have to feel like, oh, I have to rush into this trade. Right? I don't have to feel that way. So we broke above the 300. I'm like, sweet. Let's see if it can come back. If it can come back and does a little, give us a for her as an entry candle. Yeah. All you can do, stock made a huge move, wait for a pullback. And I'm sitting there, I'm like, all right, let's see for a pullback. No pullbacks, nothing. Then I got this one little pullback. I entered, and as you all know, at first trade, I think I entered, and I took a loss of, yeah, this is the I entered, and I took a loss of like, I think it was $1 per contract, and because it's Friday, I took a loss as soon because it didn't work. I wanted it to hold this level. I wanted to hold this candle. It didn't hold, but then it made a huge move up again. In my brain, I'm like, okay, it stopped me and be a little deceitful. That means, all right, it is what it is. And then it broke above this ORB. This is ORB. What's an ORB? It's a 15-minute range. The moment it broke above the first 15-minute range, started holding. This is my another hourly level right here. Now there's a confluence for me. And what's the confluence? There's three confluences that I saw. One, in my brain, I'm thinking it's a short squeeze happening because of the volume. Second thing that I'm thinking of is potential gamma squeeze if we are actually able to hold. We are able to hold, right? This could be a potential gamma squeeze, right? And then what am I thinking in my brain? He said, yes, holding the ORB. It broke above the ORB and it started holding. Yeah. And then we have what's a confluence? Confluence means more than one reason for you to jump into a trade. Now, short squeeze, one in my brain, but these concepts are just like understanding. These are not, you can't see it on the charts. This is just understanding. And, when you're trading while you can start sensing it that that's what's going on. And then when we were actually able to, because I was like, if it broke down below 300, it's not a gamma squeeze. And when it made it even new highs, like, okay, this is a gamma squeeze, right? Because it's a Friday. Then we have ORB, and then we have hourly level. It broke and pretty much holding this hourly level, right? And we have 8 EMA sitting there, this green line, 8 exponential moving average. There's 5 reasons for you to jump into this trade. That makes sense so far? So I waited and it started forming this. Hey, KCU students, it started forming the flag. Of course, this video is going on YouTube. I won't give you too much sauce. Sorry, YouTube. But it started making this little flag. The moment it breaks, if you guys remember when I saw this little pullback started happening, when I saw this pullback, and this was on a 5-minute chart, I'll jump to 5-minute chart. As soon as 10 o'clock hit, I jumped to 5-minute chart. And now you understood my entry. And let's go over when this pullback happened. I added a little bit more. When this pullback was happening, and that was exactly when I was telling you guys, do not fucking sell this trade. That were my exact words. I have recording here as well, but don't I don't want to get into all that because anyway, my words, do not sell this trade. This is gonna make a huge move. Why? How did I know? Now that's a good question. How did I know that this? Because I saw the option. Hey guys, there's another thing that I fucking forgot to break down. Another thing called option flow. Okay, what's option flow? When big money are pouring into contracts, all right, that means big money is coming in. Somebody's buying 10,000 contracts. Somebody's buying 15,000 contracts. Somebody's buying 5,000 contracts. So 5,000 contracts of 300 calls. 5,000 contracts of 3 or 5 calls. I think we were sitting in 310 calls, and I saw the volume. Even though when the price was coming down, because we saw a little pullback. Remember when the price was coming down, what I realized was those premiums that I was holding, bro, those premiums were holding to a point so nicely. Think about it. You can trade options. Okay, you can trade options, but if there's, even though the prices are coming down, but if there's a lot of demand for those options, for those contracts, the price is not going to drop. That makes sense. Prices can drop if the prices come down, but now because so many people are buying those contracts, bro, the price of the ladder is still, even you're forcing it to go down, somebody's holding it right here, so it stays at the same point. So that's what I saw on those premiums. I'm like, these premiums are holding really, really nice. They should be dropping, but they're not. That means there's equal force happening from the downside as well. Somebody's buying these. And then I was looking at just like the volume on the option chain. Bro, the volume was going up like, I think it was like, I was looking at it like 17K or 820, whatever the number was. I saw 10,000 fucking shares came. I'm like, what? I just blinked and there's like, it became 2 and then it became 32, 33. I'm like, somebody's buying thousands of. That's when exactly I said, don't fucking sell this shit. Think about it, yo. Somebody bought 10,000 shares. 10,000, somebody bought 10,000 calls. That means somebody sold those 10,000 calls. Yeah. I can't buy a ladder if telling the ladder to me. Somebody sold. That means the person who sold, he's thinking the price will not go to 310. Yeah. But the way the price is going right now, can that become a gamma squeeze? Because hey, he sold 10,000. That means per contract, this is what it is. Per contract 100 shares. That making sense? In my I'm like, okay, I'm already up on I already made some decent money. I entered at like what 3 or 5, price at 310. I'm like, okay, my stop loss is if the contracts go down to break even, sweet. That's my stop loss. But just in case if we made a huge move up towards the upside and we break above this 310, this motherfucker who just sold 10,000 contracts, he's in pain. And when more the pain, more there is to gain, right? What happened? The moment 310 broke, we made a huge move. Look at this 313. Look at this 3 fucking 17 go. We made a huge move towards the upside. And then when we're making a move 310, what's the next contract? It was 312.5 or whatever. 312.5 break, made a huge move. 315 broke, made a huge move because of the pain happening on those particular contract holders. All right, that making sense? And now I'm up heavy. This was like what 500% already at this point. I'm up heavy and moment 11 o'clock, and then it started pulling back. I'm like, okay, stocks do not go in a straight line, and that's exactly what I said when I was on the call as well. In this real time, I'm like, guys, stocks do not go up in a straight line. It's meant to pull back. It's okay. All right. Yeah. If you start staring at unrealized gain here, bro, you can't do it. If you started staring at because I think I sent a message in the chat as well that my realized gain at one stage was 11,000 or 10,000 whatever. My unrealized was close to 50K because I looked at that. I'm like, all right, sweet. I if I can feel, I just wanted to get a little feeling of it. I don't look at, otherwise I don't look at my gains. I looked at, I'm like, sweet. Now imagine if staring at that and then this pullback happened, and I'm looking at that gain, unrealized gain, and the pull. Now it's only up 20K. I'm like, I just lost 30K. Could have sold here, but how do you know you're gonna fucking pull back here? You don't. Then you start getting scared of every little pullback. Every little pullback, you're staring at the fucking profit, and hence you sell at 2% profit, telling yourself nobody goes broke taking profits. That's why you stay fucking poor, bro. Nobody gets rich taking $10 profit. Like think about it. You become a full-time trader, right? You want to trade full-time. If you finish your trading, telling yourself nobody goes broke taking profits, and you made $30 in profit, you walk out of your office and your wife asks you, how did it go? And you're like, yeah, I'm gonna quit my job, I made $30. Bro, she's gonna smack you. You're like, get your ass back to the fuck home job. All right. If you really want to make some money, you have to let your runners run. To let your runners run, you can't stare at profits. That's how the game works. And then I saw this pullback. I'm like, sweet. It can either go to break even or it can either make a huge move. In my brain, it's just like a little manipulation happening from people who are trying to still push the price towards the downside because they don't want to take a big loss. It's just like think about it. If you have unlimited amount of money, would you try to play around? You're like, man, let me just see if I can short this bitch and try to scare all these buyers away so the price can, all these buyers stop, the price can start coming down. You do that, right? And I'm like, okay, this looks like it might be a little manipulation happening, but let's see. I pulled back, I was cool, and then 11 o'clock happened. We had to switch to 10-minute chart. So I switched to 10-minute chart. I was watching this. Now, think about it, bro. Theta doesn't matter if you're deep in the money. It don't matter. Theta matters only out of the money contracts. I was sitting in 310 and 315 calls. It don't matter. All right. The moment I switched to 10-minute chart, in my brain, I'm just like, all right, pullback happened, holding this hourly level, giving me this candle, nice candle, yeah. Hey, KC, I'm talking about. In my brain, I'm like, okay, you know what? Let me just add a little bit, see what happens. Add it. Go back test. The days when we have the best fucking trend, the best trends, the 10-minute 8 EMA, if the 10-minute 8 exponential moving average is holding, it's sexy. Like, go back test. In my brain, I'm just like, if this is not a solid trend, but if there's a solid trend, 10-minute 8 exponential moving average is holding. This is a nice move. In my brain, I'm just like, all right, it's holding the 10-minute, sweet, whatever. Then it started, getting tighter and tighter. A lot of people will think of it like, what I want you to understand of it is when you try to compress something, like what happens, a reaction comes. It's like a spring. Try to compress. As it gets smaller and smaller, that means more energy it's fucking getting. And that's exactly what I saw on this when I was watching this Tesla as well. I'm like, okay, it's getting tighter, tighter, and tighter into this fucking 8 exponential moving average on a 10-minute chart. Yeah, you see this 8 exponential average holding? And this. I'm like, it will be interesting when at the point where it has to do something. Either it goes up or either it fucking goes down. Whatever it is, I'm ready for both. Yeah. I'm sitting long already. Whatever it is, I just have to fucking sell my position. If it goes up, I'm gonna print. If it goes down, I'll jump out. No problem. Fuck it. Who cares? What happened? Check out the volume. I'll show you on a smaller time frame just so you know what actually happened. I don't trade on a 2-minute chart, but just check this out. When we broke, what happened? As I said, the energy release, check out the volume. That makes sense? The moment it broke, it made a huge move up. It's just the energy release that's happening at that stage. And what happened? It made a huge move. 320 broke. That made a huge move around this 325. Um, I said, I said this in the chat. Got out entirely. Super tired. I was just super tired, man. At this stage, I'm like, man, I can't do it. Could have held it for whole day, but you know, there's a. It's like, all right, enough. Enough. Also, while I was this trade, I did some dumb shit on SPX, where I went long at the wrong time. KCU, if anybody's in my K Capital University, you'll understand. I went long after this candle. I'm like, okay, this candle looks go long. The loss was huge. The stop loss is huge. The reward, I didn't pay attention to. 6,000 was there. I didn't pay attention to it. But look at this. Remember in the momentum module, I'm talking about the candles becoming smaller and smaller. The candles becoming smaller and smaller. I did this, and then around 6,000. I still do not know 6,000 is there. Why and how did I make this mistake? I made this mistake because of I just looked at my fucking P&L, the one that I'm talking about. I looked at my P&L, and it made me feel like I'm the guy. I'm the guy, and your fucking ego at the wrong time. I didn't even know 6,000 is there. It's like I missed it or just didn't pay attention or being careless. But the stop loss was, oh my God, this was massive loss, yo. Even though it's a $4 move, SPX, 0 days to expiration, towards the end of the fucking day, this is like midday, that hurt. And I had big position as well. All right. I did some dumb shit here around this time, and that was also one of the reasons why I'm like, man, I don't want to really fucking like I'm done, because there's the little story I'll tell you. All right, I read it in one of the books. There was a chicken. Okay, this is a very important. It's a very really important story. It'll teach you something super important. There's a little chicken, and chicken's like he's like, I'm the strongest chicken in the fucking jungle. It's a jungle, and he's like, I'm the strongest fucking chicken around here. I'm the strongest animal. I'm the strongest bird. Nobody's stronger than me. Anyway, all the fucking creatures of the jungle, they're like, oh, are you the strongest? I'm like, yeah. So they set up boxing. Of course, this is just a made up story, but you get the point. They little set up a little boxing match, right? So he's like, okay, let's see if you can with this bird or this animal. Yeah, he did. And towards the final match, he's competing with a lion. All right, it's an angry fucking lion. His chicken's like, fuck, I don't know how I'm gonna get it. But let's see. The lion bounced on this chicken. He ducked it down and just grabbed with his beak, grabbed his heart out of the chest and just killed him instantly. Now the chicken won. All the animals in the jungle are fucking sitting right here. They're like, oh my god, this is fucking insane. Like this chicken is fucking crazy. He just knew a lot of tactics or whatever. Now this is where he fucked up. Now everybody's cheering him up. Bro, he defeated everybody in the jungle. Yeah. He won. Sweet. It's to celebrate, but there's enough point. All right. He celebrated for 2 minutes. Done. The clouds, the all the crowd stopped cheering him up. Sweet. But then he jumps on the side of the fucking boxing the ring, and he starts screaming, "I am the strongest. Nobody can fucking defeat me. Anybody who says he's just, I'm gonna kill him, just like what I did to this lion." He screamed so loud. There was an eagle flying. Eagles don't give a fuck about fucking boxing, man. Eagles just like to stay by themselves. Eagle flying in the fucking sky. He looks at this chicken. He's like, "Oh, that looks like a yummy food." Right? Comes, grabs this fucking chicken, flies away, kills it, eat it, done. The moral of the story is, when you win, there's a point where you shut the fuck up, or you're gonna get eaten by the fucking eagle. Right? There's always one person who's stronger than you who just doesn't like to fucking say it. If you flex too much, there's that eagle's coming for you. All right, that was a point that I felt in my. Of course, I tell people that hold your runners. There's a point in your trading where you need to learn. Okay, it's enough. I don't want to be that chicken who gets fucking eaten by the eagle, right? Because everybody, you know that there's days when you make 7K, 10K, and then you keep trading on that day and then you lose it all because you that chicken who's thinking like you can, you can do whatever. Let the eagle spot you. That's the whole point. All right. It's not the story, but the moral. Yes. Sweet. And that was exactly where in my brain I was like, you know what, man? I'm done. I don't want to get pop. And look at this. What happened? I don't want to be a part of any of this. I'm happy. Done. I'm out. That makes sense? Yo, we broke down so much, man. Time frames, dynamite levels, gamma squeezes, short squeezes, my trades. And that's hence I made, bro, this is a 50, I entered a 305, exited 325, $20 move with some size, and that's how I made 50 grand. All right. Sweet. Guys, also, hey, this is clear. This is good. Everybody who's sitting here on the Zoom, sweet. Yeah, I added a few times, Christian. I added a few times. How many contracts did I buy? It was a think about it, man. It's a 700% trade. Um, that means 7 times the money. So if you buy $5,000 worth of contracts, that can turn into 30. That can turn into what? 35 grand. So it's not the contract. It's about that I had such a huge move, such a huge that's why I was able to print the money. I didn't have a big position size. How many contracts? I kept getting in and out, so it's difficult to start calculating the contracts. Maybe about nearly 100. I said in the chat because I didn't want to really count. You imagine you adding a little bit here, then you sell a little bit here, then you sell a little bit more here, then you add a little bit more. It's so hard to just start, calculating the whole thing. Contracts is that. No, it's just like little trades and then holding the most part of it as well. And this will go on YouTube, guys, so you can watch the recording over there. And if you're watching this on YouTube, guys, let me know in the comments if you enjoyed this. All right. And I'm sure you learned something. I'm out. You guys have fun. It's 5:30 in the morning here, and yeah, I need to sleep now. All right. You guys have fun. Peace. Look after yourself, and subscribe to the channel if you're watching this on YouTube. All right, guys. Goodbye.